The U.S. Mint has not made 1/10 ounce American Gold Eagles in over 3 months. And then this happened. Welcome to Silver Heist. Thank you to our returning subscribers and guests. We're a channel that likes to buy physical gold and silver, and we like a coin with a good story. If you like those things, please subscribe. In this video, we're going to talk about the American Gold Eagle, the 1/10, 1/4, 1/2, and full ounce gold eagles, and look into some of the numbers and look at U.S. Mint data to understand what happens when the U.S. Mint doesn't make 1/10 ounce gold eagles for 3 months, and how that impacts the prices that you pay. So if you're a gold stacker and you want to understand premiums and how you can make your dollar go further, then stick around. So I'm going to move through these charts pretty quickly. I've shared some of them in the past, and so you can pause or rewind if you want to look into something. So the first thing is to recognize that 2020 is a special year. It is what I'm going to call a bull market year. And so not only is the price going up, and we've hit almost all-time highs of $1,800, but the volume of ounces sold by the U.S. Mint in the form of gold, American Gold Eagles, is going up. So this year, in 6 months, we've made more ounces of American Gold Eagles than the previous 3 years. The last time we had a financial crisis in 2008, that quickly built on the gold bull market. The price had been going up, but the volume took off. And so what this chart shows is that the amount of gold ounces in a given year tripled or quadrupled as it transitioned from 1 year to a raging bull market that eventually led to an all-time high and then stayed until it faded. So this year is on track to double, triple, or quadruple. So this is a bull market. We're hitting highs, and we're hitting highs in volume. Once we separate typical years from bull market years, then let's learn about gold eagles. So what might be surprising as gold stackers is that there's different sizes that people appreciate, and even though it makes total sense for us to stack half ounces or quarter ounces, the market's really defined by the 1 ounce gold buyer and the 1/10 ounce gold buyer. So in the typical year, the 1/10 ounce gold, in terms of quantity of coins, not ounces, but quantity of coins, more 1/10 ounce gold are sold than anything else. Big ounces are next, and these are just frankly not part of the game. But in a bull market year, it really draws out new money and people who want to buy 1 ounce gold coins, and it really takes off. So the 1/10 decreases in proportion to the total market, and the 1 ounce increases. Now this doesn't actually mean that there's less 1/10 ounce gold coins sold, but as a proportion of all the coins together, it's a smaller piece of it. What happened this year? So what happened this year is that January, February, March, it kind of looked like a typical year. So the proportion of coins relative to all of the quantity of coins made, it was really a typical year. But February, March is when the stock market crashed, so things changed pretty quickly. And so what happened is, now if you look at the first 6 months total, they've increased the quantity of 1 ounce coins sold. And when you look at the 1 ounces are now a bigger part of what the U.S. Mint is producing. These are staying just the way they always do. And now the 1/10 ounce gold is a smaller piece of the pie than when it started. So if you look at it together, the 1/10 ounce gold were a big piece of the pie in terms of coins, and it's been brought lower. But the 1 ounce gold coins are now a bigger piece of what the mint is shipping. From a big point of view, the mint has achieved the balance that they want. This is now a bull market year. So the 1 ounce coins are dominating what they're producing. So they're in balance to what they want. Now, how they achieve this is how it's in balance to the mint, but it's out of balance to the consumer. So how the mint achieved it was by producing a lot more 1 ounce coins, but stopping production of 1/10 ounce coins. So they've done that, but then this happened. Okay, so with the stock market starting to collapse in February and March, the demand for gold increased in March. So they brought things, even at the 3-month snapshot, like I showed you, it was fairly in balance. It was fairly a balance of sizes as a typical year, but shifting towards the 1 ounces. So between the shutdown of the West Point Mint and just dealing with the new demand, they definitely shifted production to the big sizes. And so the shift was on to make as many 1 ounce coins as possible, to the point of not making other size coins. Not that these two middle sizes are made often anyways. The big shift, of course, is the 1/10. 0, 0, and 0, and frankly, partway through July, 0. So in order to achieve balance with the 1 ounce coins, they've ignored the 1/10 ounces for over 3 months, but then this happened. All right, so this is what I'm seeing. So the impact to not making a certain size coin has an impact on the supply. So what I've noticed in the past, and I think this is not only a typical year, but all the time, is that when you go into online dealers, the random coin is a little cheaper than the 2020. And I figured it's because you're getting a guaranteed new coin straight from the mint. So you pay a little bit more as opposed to something that's in inventory or something that was bought from another party and then sold by the online dealer. So random is usually a slightly better deal. But this year is not a typical year, and it's actually a little different. So with gold at $17.98 on July 10th, and now it's cracked 1800, a random year. So I went on something called findbullion.com. A random year is 1897, and a 2020 was 1871. And so this is a pattern I've seen all year, is that the new coin is actually cheaper than the random coin. And I think it's because with the new increased interest in acquiring gold, that it's easier and more predictable for the bullion dealers to get them new from the mint than to go out into the market and buy them from people. So either people don't want to sell their gold coins and they're holding them, or it's just more predictable to get it from new. So the supply of new coins is important to the market. So the old coins can change hands, but the supply of new coins is the easiest way to get fresh gold into an increasing appetite for gold market. So even the 1/4 ounce gold coins are also cheaper. Yep, also cheaper to get 2020. So it's like a difference of 5.1% versus 3.7 premium, 8.3, 6.6%, 10.5%, 8.6%. So there's a slight premium improvement by getting new. But because the mint had its own needs and it wanted to balance the market and increase the quantity of 1 ounce coins, it clamped down hard. It's been 3 months since any 1/10 ounce gold coins have hit the market. And so this is what happened. I think we've been paying high premiums for any 1/10, but there is no supply. There is nothing in the pipeline in 2020 for over 3 months. So the best deal and the only deal I found on online bullion deals was APMEX. It's $276, which is a whopping 53% premium. So that's what happened. So the mint has met their needs to sort of balance out the coins they're producing, but they're not meeting the needs of the ultimate consumer. The 2020 gold market is very dynamic. I had only stacked fractional gold, and then this happened. If you want to hear that story, please watch our featured video.